Welcome to The Explainer, everyone. Today, we're diving into one of the wildest, most fascinating roller coaster stories in the entire digital asset space, Zcash. On one hand, it's literally the pinnacle of digital privacy, a real game changer. But on the other hand, as we're going to see together, that exact same technology is a massive double-edged sword. It brings some pretty terrifying technical vulnerabilities along for the ride. So we're talking incredible profit, devastating peril, and the intense calculus investors have to make today.
Just to grasp the sheer gravity of where Zcash stands right now, think about this number: 50%. Imagine waking up, checking your portfolio, and boom, half the value of your investment has completely vanished in just 48 hours. Crazy, right? That's the massive flash crash that just hit Zcash, sending absolute shockwaves through the entire market. How does a major institutionally backed digital asset suffer a collapse like that? And honestly, can it even recover?
Okay, let's dive into this. To make sense of all this extreme volatility, here is our roadmap for the explainer. First up, the birth of absolute privacy. Second, the 2025 institutional rally. Third, the 50% flash crash. And finally, profit versus technical peril.
Part 1. The birth of absolute privacy. The origin of Zcash.
To really understand the recent crash, we have to rewind all the way back to October 28, 2016. Right out of the gate, Zcash wasn't just another random token. It was actually built straight onto Bitcoin's tried and true core code. But the team behind it, we're talking heavy-hitting academic cryptographers from Johns Hopkins and MIT. They didn't just copy and paste Bitcoin. They engineered it to introduce this totally revolutionary layer of absolute secrecy that frankly just didn't exist anywhere else at the time.
The actual magic behind all that secrecy relies on something called ZK SNARKs. It stands for Zero Knowledge Proof Technology. Basically, in plain English, it lets you verify that a transaction is completely valid on a public blockchain while keeping the sender, the recipient, and the exact transaction amount entirely hidden. It's kind of like proving you have the password to a safe without ever actually revealing what the password is. Pretty mind-bending, right? Well, because of its low initial supply and this crazy privacy tech, Zcash sparked a legendary frenzy on launch day. Early trades pushed the price to an all-time high of nearly $3,191.
Moving on to Part 2, the 2025 institutional rally, the breakout year. Let's fast forward from those early pioneer days to what really became the defining era for Zcash. Now, before we talk about the massive highs of 2025, we actually have to look at the lows. During the first half of that year, Zcash was incredibly quiet. By August, the price had completely bottomed out at a remarkably low $35. If you were watching the charts back then, you probably thought the excitement around this coin had completely fizzled out.
So, the big question is, what changed? Why did it suddenly explode out of nowhere? Well, the answer comes down to macroeconomics. At that time, there were shifting global trends, specifically these intense worldwide debates around wealth taxes, and that started to seriously spook major capital. Suddenly, absolute privacy wasn't just some cool feature for tech nerds anymore. It became a highly attractive shield for big money. Because, as it turns out, billionaires really do not like being audited, and that sparked a massive institutional appetite for privacy coins.
And that appetite? It quickly turned into an absolute market frenzy. The real catalyst hit when billionaires Cameron and Tyler Winklevoss poured a massive $50 million into a digital asset treasury focused entirely on Zcash. With that huge institutional stamp of approval, Zcash went on an absolute tear. The surge was just staggering. It climbed over 350% in October alone. By November 17th, it hit a massive cycle high of $723. I mean, anyone who scooped up that $35 dip in August and held on to the November peak, they saw truly monumental, life-changing profits.
Section 3. The 50% flash crash. Technical peril strikes.
So, if 2025 was this euphoric bull run, 2026 suddenly turned into a terrifying financial thriller. The whiplash was incredibly rapid. Early in the year, there's amazing news. The SEC officially closes a long-standing probe without any enforcement action. Total regulatory green light. The market rejoices, and the price pushes back up near $624 by early June. But then, disaster strikes. On May 29th, a security researcher discovers the orchard bug. The developers scramble, pushing out an emergency patch by June 3rd. But you know what? The psychological damage was already done. Panic set in, major players dumped their holdings, and by June 5th, the price just crashed all the way down to $309.
Now, why did the market react with such sheer terror? Well, it's because of what the orchard bug actually meant. This wasn't just some minor little glitch. It was a critical vulnerability in the privacy pool. Theoretically, this bug would allow an attacker to secretly mint unlimited counterfeit Zcash. Think about the terrifying paradox there. Because Zcash is completely private, it is incredibly difficult to audit whether invisible, fake money has been injected into the supply. Just the mere idea of an invisible money glitch completely destroyed market confidence, literally overnight.
And this brilliantly illustrates the sheer, unadulterated volatility that Zcash investors have had to endure over the last year. I mean, going from a seemingly dead bottom of $35 in August 2025, rocketing to a euphoric peak of $723 in November, only to be slashed down to $309 by June of 2026, all because of a single line of vulnerable code. It is the absolute definition of a high-risk, high-reward roller coaster.
Finally, Section 4. Profit versus technical peril. The calculus.
As of today, Zcash is hovering right around the $410 mark. So after such a massive technical failure, is this actually a viable investment right now? Let's look at the raw calculus completely objectively. The bull case argues that Zcash is trading at a deep discount compared to its recent highs. If the network regains trust, technical analysts are pointing to a strong resistance band around $600 to $650. Reclaiming that means substantial profit, especially since heavyweights like Grayscale and the Winklevoss twins are still holding massive stakes. But on the flip side, the bear case is definitely looming. The orchard bug proves that zero-knowledge proofs are incredibly, almost dangerously complex. If the market even suspects that forged coins are circulating out there, extreme volatility will take over again, and the price could easily plummet to test the $260 support zone.
So let's ground this theoretical risk into absolute reality with some exact math. If you were to risk $1,000 of capital on Zcash today at an entry position of $410, you really need to map out your targets. Setting a take-profit target at $500 would yield a nearly 22% gain, bringing your equity to just under $1,220. Not bad. However, to protect yourself against another sudden crash, setting a strict stop-loss trigger at $380 is absolutely essential. That would cap your potential loss at around negative 7.3%, leaving you with roughly $926.
What this does is leave us with an exact 3-to-1 risk-reward ratio. Essentially, you're risking roughly $73 to potentially make $219. The huge takeaway here is that Zcash is absolutely not for the faint of heart. These recent technical failures have severely tested market confidence. It has to be treated as a highly speculative asset right now. That means strict, non-negotiable stop losses are required if you decide you're going to buy the dip.
At the end of the day, Zcash unquestionably remains the pioneer of blockchain privacy. It brought revolutionary, academic-grade secrecy to the world. But as we've seen, that cutting-edge technology comes with incredible complexities and devastating vulnerabilities. So, as you weigh the massive potential upside against the terrifying risk of forged tokens, I'll leave you with this one central question to ponder. Is the absolute privacy truly worth the technical peril? Thank you so much for joining me on this explainer, and keep your eyes on the charts.
Thank you for watching this video. Please subscribe this channel.